Minutes from the RBA's final meeting reveal concerns about higher spending over the summer holidays without COVID restrictions. So will higher interest rates continue to be used to put a brake on spending? Joining me now live is Executive Chairman of Yellow Brick Road Home Loans, Mark Bouris. Mark, thank you for joining us. Where do you see rate hikes heading to in the new year?
I guess it depends largely on how much money we do spend over the next six to 8 weeks. But the general consensus is that the February meeting, there's no meeting in January, but the February meeting will actually have another 25 basis points delivered. Now, there's quite a divided view amongst all the economists and the commentators around town. So someone like Gareth Aird from CBA, he's saying that'll be it. A 3.35% cash rate, which is another 25 basis points in February, that will more than likely be the end of the rate rise cycle. But there are plenty of the money markets who are sort of saying there are at least another 3 rate rises post that. So I guess what they're trying to do is speculate what will the growth numbers and inflation numbers that come out of the January period, that'll be at the end of January, what are they going to show us? What are they going to tell us about inflation here in Australia? It's not going to drop back down to 3% or 2%, that's for sure. So I'm expecting for another rate rise, at least one more rate rise in February next year.
OK, well, we'll certainly find out what the future holds. But on that, household interest repayments, well, they've experienced their biggest increase in history, as we know. Will it get worse?
Well, if the rates go up one more time, they definitely will. And one of the interesting things about this is that in the last 8 months, Australian mortgage holders has seen their repayments increase by about 41% from where they were in April this year. So that's quite amazing. That's the highest increase and the most rapid number of increases in Australian economic history. And you would have to expect that just that fact alone, that piece of information alone, is going to have some enormous impact on the Australian economy. But equally, you have to weigh that against the fact that we haven't had rate rises for 12 years. And that's also a record. So we haven't seen rate rises up until May this year. We hadn't seen it for 12 years in Australia. And I don't know any period where we've had a 12-year period, any time where we've had a 12-year period of no rate rises in Australia. So we've got 2 records which are clashing with each other. The question will be, is the latest record, that is the increase in interest rate payments for Australian mortgage holders, that record for 2022, is that going to be sufficient to quell the previous record of no rate rises for 12 years?
This is an interesting one because regional house prices fell 38% from a COVID high, and we know that there were a lot of people who moved out into regional Australia during that lockdown period. So why the falling of prices?
Well, all of a sudden, people who have previously worked in the cities are now being required to come back to the cities. So, office environments are sort of saying new policy must come in 3 days a week, and you can have 2 days a week and off at your home unless there's some sort of exception. Therefore, to some extent, a lot of the people who have moved out of regional areas are now finding they've got to be back in the city at some stage. So there's not as greater demand for those properties in the regional areas as there was during the COVID period. There still is a big demand, but don't get me wrong. Well, and I'll put it another way. There's still demand that outreaches supply of regional properties. In other words, there's not enough regional properties to meet the demand. But the level of demand relative to what it was 2 years ago is lower. In other words, there are less people seeking to move into the regional areas. So as a result of that, regional house prices have taken a bit of a flip down. So, and you would expect that because regional house prices actually flipped higher during the COVID period. So you expect that to happen in any event. But if you look at prices today in regional areas relative to prices pre-pandemic, pre-COVID, there has been an enormous increase across the board. And there still is very strong demand relative to the period. So relative today, relative to pre-pandemic. So overall, people still like living in the regional areas. They're getting a better lifestyle. They've readjusted their lives. They've got jobs in those environments, or they're working from home most of the time.
Yeah, they certainly have. Mark Bouris, we have to leave it there. Thanks for joining us.